It is Sunday, March 2nd. My name is Lee McMahon. Thank you very much for joining me here in the weekend webinar sponsored by GlobalFXClub.com. Please take a moment to look over the risk disclaimer, which should now be on your screen, and then we will begin. If you are watching the recording, please take a moment to pause the recording and carefully read over the risk disclaimer. For those of you that are actively here joining me today, again, thank you for taking some time out of your Sunday to hang out with me. If you have questions or requests for basically anything that I have the stock ticker for, I'll be happy to take a look at it. So indices, commodities, bonds, currency pairs, stocks, whatever you have, by all means, please feel free to make a request, and I'll be happy to cover it. So let's get started here. Markets just opened. We do have a gap here on Aussie. Couple reasons for that. Slightly softer data out of China released Friday night, Saturday morning. So that's causing a little bit. And then also I think the ongoing uncertainty in Ukraine is being blamed here as well. We do see a little bit of a risk-off theme right now. Dollar yen also gapped lower. So the Aussie's gapped down about 0.4%. It's trading below 89. It's at 88.97. You can see my notes here on the chart. I do see this as a potential inverse head and shoulders forming. The major resistance here is about 90.60, and the major support level is about 88.30, and then this 86.59 previous low. I do real quick want to show you something interesting here with gold. I am not the only person who's been talking about this, but it is worth noting. This is gold in purple overlaid with Aussie dollar. You can see gold tends to lead a little bit. We saw gold collapse here back on the 12th of April of last year here on the daily chart. A little bit later we saw Aussie follow it. Again, we saw gold rally. A little bit later we saw Aussie follow it. Saw gold start to decline, and then we saw Aussie follow it. If you look here, the bottom on gold is very similar to the bottom that we have right now on Aussie dollar, right? Low, slightly lower low, and then a rally. And really, we're seeing some pretty significant similarities here between gold and the Aussie, and we're starting to see gold get ahead of Aussie. All right, so if we do see that lead continue, would expect to see Aussie dollar continue to rally up through this inverse head and shoulders if it continues to follow gold. There's really no guarantee, of course, that it's going to, but that is something that I think is worth noting and worth keeping on your chart. So that's Aussie. Kiwi. Okay, again, you can see my notes. This 84 level has been fairly tough lately, really since the 16th of November of 2013. Wicked above, couldn't close, eventually fell down towards about 81. Here on the 14th of January of this year, wicked above, couldn't hold, fell down eventually towards about 81. And then here, 28th, so on Friday, wicked above, couldn't hold, and now we'll see if we manage to get a move back down towards 81 again. So do keep your eye on Kiwi as well. Again, so you can note that I do have differing biases on Aussie and Kiwi, which could mean that we could be in line for an Aussie-Kiwi bounce. I don't have a great setup on this pair, though. I almost never trade it, and I'm certainly not going to trade it unless I have something spectacular. And right now, there just really isn't much that I'm interested in on Aussie-Kiwi. Some of the other, let's see, any questions? Okay. Here's Euro. All right, there is a possible ascending triangle going on Euro here. You can see it, we've touched here, kind of here, and then here. So this trend line is supporting, and then this 138.70, 50 area, all right, is the clear resistance. We do have this one strong wick above, but other than that, we held it on Friday. I held this area again back on the 22nd of October of last year. So we are near the top of this ascending triangle. So if we do start to see some downside, all right, look for about 136 for a possible long. And then, of course, if we do see a breakout and a daily close above that level, you could start to look for the pattern to continue to play out to the upside. So right now I don't have any particularly strong urge to trade euro dollar. Just kind of watching it here and seeing what we see on the euro. Pound dollar. Again, you can see my notes. Possible ascending wedge, which is bearish, but long-term bearish. They're hard to play bearish until they break. So looking for this 166 level basically as a possible support area. You can see it's gotten some interest in the past. And then, of course, a move down towards 164.35 would be a long opportunity as well. Only a move below 164 would get me interested in shorts on pound dollar. If we do get a daily close above 168, I think that should accelerate some upside, and I might try to buy some if that does indeed occur. Let's take a look at dollar yen. All right, so dollar yen, like I said, gapped lower. It's down about 0.25% right now. Testing this trend line. All right, so the one thing, this is again daily chart. The red is the 50-day EMA, green is the 100-day. You can see that we've been stuck here between these two levels since this for basically all of February. And we finally now are below, again, the 100-day, leading into the Nikkei, the Japanese session, which has been where most of the dollar yen selling has occurred. So we sell off in Asia, rally in the U.S. and Europe, sell off in Asia, rally. So there is some major potential here, I think, on dollar yen if we can stay below 101.50, basically 101. We'll stay below 101.80. And start to move a little bit lower. Other than that, kind of just have to play the levels as they are. Major resistance about 103.56. Next support, if we do continue to break down, is basically 100. It's the 200-day EMA, and then obviously, though, just 100 figure tends to garner some significance. So keep an eye on dollar yen as well here at the start. Dollar Swiss. Dollar Swiss here, sort of near the bottom of this channel, I suppose, here on daily. So we are at the support area here. You can see 1, 2, 3, 4. This trend line has been pretty consistent. We're pretty close to it again. About 87.60 or so would be the ideal entry, and you can see that we do have some RSI divergence. All right, again, RSI divergence, not really anything super, not a guarantee, but worth taking into mind. One thing that bothers me right now about dollar Swiss is that sentiment is retail sentiment is extremely bullish. 13 to 1, or not 13 is the SSI for FXCM, which means about 92% of traders are long dollar Swiss. So a little bit of concern there. I would like to see that number moderate. I would like to maybe buy a major sell-off, spike lower of some sort, but right now we're just going to keep an eye on it near this trend line support and keep an eye and see if we do manage to rally a little bit. Another Swiss pair that I'm watching is CAD Swiss. Similar story, RSI divergence near kind of a trend line support area. CAD Swiss is if my trade plan for CAD Swiss is to buy if we do see a daily close above 80. Until we see that, I'm ignoring it. But if we do get a daily close above 80, which would put us above this tighter descending trend line, I would look to try to snag some longs. But not going to do anything until we actually do get that move above 80. Other pairs. Pound Kiwi. Nothing particularly noteworthy, I don't think, on Pound Kiwi. I would be watching this ascending trend line. Okay. And then this area right here is kind of the resistance level. All right, so another potential ascending triangle going on. I'm not really keen on playing it until I get a break really in either direction. I might be tempted to nibble on some longs at about 198, but most likely not. These pairs, not a huge fan of lately. Euro Kiwi. All right, we held this daily trend line support. Pretty nice candle on Friday. So 167.75 is a good breakout level. That's above this descending trend line. And then I would also look to short if we do manage to get another convincing close below this ascending trend line. You can see technically on Thursday we did have a daily close below, but the trend line's not perfect, and so the close wasn't perfect. So we'll have to look for a little bit more enthusiasm on a break below. So something a little bit to watch on either side for Euro Kiwi. I do have something for Aussie CAD as well. Another Aussie pair that has opened lower. Aussie CAD. I'm watching this 90. So we're at 98.60 right now. I'm basically watching 98. All right, which is we're below this trend line. So note that. Note that the gap. All right, so the gap fill here. If we do get a gap fill, is going to correspond nicely with a retest of this broken trend line. So that's your bearish setup. But I'm hesitant to sell Aussie CAD. I'm hesitant to sell Aussie CAD because I am bullish Aussie dollar, at least tentatively. And I'm also bullish dollar CAD. So I don't think see the crosses aligning nicely to sell Aussie CAD. So I'm looking at this 98 level, 200-day EMA, 50-day EMA, and a retest of this broken descending trend line. So good support around 98 for a possible move back up above parity to retest this 160 level or so, which has been resistance so far. Dollar CAD, you can see my notes, possible flag. I'm not looking for anything exciting here in dollar CAD. I'm looking and expecting to see it consolidate for a while. I'd buy it down near 109, and I'd sell a break above 120. I'd buy above around 109, and I'd buy a break above 112. No short setups on dollar CAD for me. I think those are all the ones that I had notes for. Oh, one more. This is EuroCAD. Nothing to do on EuroCAD until, again, we see a little bit of a breakdown. In this case, it'd be below about 150, 148, and then below 150. The other one that I'm looking at, or that I have notes on at least, is the dollar Swedish krona, USD SEK. Very consistent descending trend line. You can see we wicked off it 3 times. And then we sold off hard on Friday on stronger than expected Swedish GDP. We sold off right into this very nice support zone here on daily. We've gapped slightly higher here to start the week, looking for this area to hold as support and start to rally up towards about 655. If we do break below 6.3 is the next support level. You can see it down here. If we do continue to run 655, you can either get long or add to your longs above that level on a breakout trade. And then if we start to break down, obviously below, obviously another new low. Today, target 6.3, below 6.3 opens up a fair amount of downside going forward. So those are the key levels to watch on the dollar Swedish krona. If we look at the dollar index, here you can see it broke down a little bit. Does not look particularly healthy here to start the week. So, watch 80 basically on the dollar index. Stocks look fine. No real long or short setups on like E-minis. Ditto the Dow and ditto the NASDAQ. You'll clean that chart up. The Nikkei, still kind of in its bearish flag pattern, but we'll still really need some selling to come in sometime soon here, or it's going to just squeeze up above this resistance area at about 15.2 and continue higher. So that's something to watch as well, along with dollar yen. All right, so if you have questions or requests, now would be a good time to ask them. Remember, we have a very busy week for fundamentals and data this week. It's the first major week of the month. So we have non-farm payrolls on Friday and everything that goes with that, including ADP, all the ISMs, the US ISM, all the PMIs this week as well. We have a couple Chinese releases tonight. We have HSBC PMI. We have Aussie releases as well tonight, so those are worth watching. The UK PMI numbers start tomorrow morning with manufacturing PMI, I think, and then they do manufacturing, service, and construction. So those are the three to watch. So we also may have, I should know this, let's check and see if we have the ECB and Bank of England this week as well. I think we may. Aussie GDP on Tuesday, that's another one to watch. Aussie retail sales on Wednesday. And yes, we do indeed have the Bank of England and ECB this week as well. So very, very busy week this week. Lots of data, so just make sure whenever you're taking a trade, you have at least one eye on the calendar so you know that there may be some volatility coming up. Pound Swiss, certainly, and then I'll look at Euro Pound as well. Pound Swiss, all right. Haven't looked at this one in a while. So we have the major support level is about 146. But it looks like we do have some light support ahead of that as well. Yeah, kind of in this range right here. So about this 200-day EMA aligns nicely with a half decent trend line at about 146.60. So that is the next support level. You could try to buy it against there. So that's what I'm looking at, two support areas. If you're looking to sell, I guess against this descending trend line here at about 148. So those are the levels to watch on Pound Swiss. It's been pretty choppy lately, which isn't surprising. Euro Pound has also been kind of choppy lately. Euro Pound, okay, this is a pretty nice descending trend line here that I would be keeping an eye on. So about above 83, all right, and Euro Pound could start to squeeze higher, which would mean Pound Swiss probably starts to head lower. It's not 100% guaranteed, but that's pretty likely. And then we have the bottom of this descending wedge down here in this area. So that's kind of the two levels to watch on Euro Pound. I do like it long above 83 if we can get there. And if we fail there, I would try to buy it at around 81.28 or so. Again, for hopefully eventually a breakout higher. So if you're trading Pound Swiss, watch Euro Pound. But Pound Swiss, your levels, the first long level, if you want to buy it, is 146.60. Your first resistance level is about 148. Okay, so we have geopolitical tensions in the Ukraine. Yeah, we have a lot of stuff going on in the Ukraine. That's part of the reason you saw Aussie gap lower, you saw dollar yen gap lower. Safe haven is right now, yes, clear demand. The losers will be, the winners are going to be the yen and the dollar. The losers are going to be the Aussie, the Kiwi, the ruble, if you trade it, which you can. And probably, yes, the Turkish lira, Mexican peso, South African rand. Those emerging market currencies tend to be very sensitive to risk trends. So they may take a little bit of a beating. We can actually check and see if what the Turkish lira has done. So the lira got slightly lower. USD TRY up slightly, but nothing overly dramatic going on there yet. So I'd really be looking at South African rand, a slight gap higher. If you trade the South African rand, I don't. I haven't ever. But if you do, and I know some people do, this is a very, very, very nice bull flag pennant type thing going on that's worth watching. So yeah, the Comdols and basically the yen and the dollar are going to be the winners. Everything else is going to be a little bit uncertain. The way it's looking right now, Aussie's going to be the big loser. Yeah, Sam, I think that's a good point. So it kind of depends on how this goes. Right now, I feel like the situation in the Ukraine could go either way, where everything kind of gets resolved and everyone backs down within the next couple of weeks. If that's the case, then yeah, this drop that we're seeing may be an absolutely spectacular buying opportunity for some risk. But yeah, agreed. Very much so. That's kind of what I was looking at. The concern that I have is that this isn't going to end quietly or nicely, and I think there's some legitimacy to that concern. The Russians aren't particularly playing ball yet. The Ukrainians are starting to get a little edgy, and you have the U.S. and Europe starting to talk a little bit of a bigger game. So, there is some concern that this blows up into something a little bit bigger and a little bit scarier. And if that's the case, then I think you would be well served to continue to avoid risky assets. But yeah, if this starts to settle, I think I agree that that fits in nicely with like an Aussie dollar inverse head and shoulders. We see a little bit of risk off here at the beginning of the week, and then people start to feel a little bit more comfortable with what's going on, and we start to see risk get bid a little bit. Well, yeah, the RBA has definitely officially switched from dovish to neutral, looking for a period of rate stability here in Australia, and they're going to be thrilled that there's someone in the Aussie despite that. So yeah, the RBA has kind of removed one of the bearish drivers on the Aussie for now. For now, at least, if we see the Aussie start to get above 92 or something like that, we may see the RBA step back in and start talking intervention. But there has been some improvement in the fundamental look for the Australian, at least in the rate outlook, which is like I said, now at least officially neutral as opposed to openly dovish like it has been. I've been looking for that for quite some time, and it hasn't happened yet. The problem is that the RBNZ remains more hawkish than the RBA. And this is a pair primarily driven by rate expectations. And by primarily, I mean almost entirely. So chances of it reversing, right now, I don't see anything to make me think otherwise. I mean, maybe if we drift down towards this 140, 104, 90 area again, we may see a bounce. If we do manage to break above 109.16 or something, we may start to see some continued upside. But right now, I don't see anything in the fundamental picture that's really going to change that. We had our little rally here when people changed their expectations of the RBA, but it hasn't been enough to sustain any sort of continued strength. So unless the RBNZ steps in and starts really threatening the Kiwi and start saying that they're really going to start considering intervention, I don't really think there's going to be a fundamental catalyst to really spur an Aussie-Kiwi revival. Barring a series of great numbers out of China, which I don't think we're going to see, I think Aussie-Kiwi is going to be stuck a little bit until we start to see the RBNZ, temper its hawkishness a little bit. All right, other questions, requests for pairs. Yeah, all right, let's do that. I have another pair that I haven't looked at in a while. Okay, so US dollar, Singapore dollar. Okay, so there's your bearish setup. Very nice retest, started to head a little bit lower. Possible, like, kind of head and shoulders type scenario going on here, but not really anything that I'm excited about. Bullish setups, all right. Held this 200-day EMA very nicely, so there's your support level. Fibonacci retracement, also held a 50% fib. If that is the case, it does suggest the possibility of new highs. So 125.85 is the level to buy against. And then we do need to see it get above this trend line here to start, accelerating to the upside. But, you've seen some of the bearish pressure abate, all right, when we've broken above that trend line. So right now it looks pretty bullish to me. I would have loved to be long from down here. I'm not comfortable buying up here. I might look for dips down towards about 126.27 or so, this previous congestion area, to try to buy, just get a little bit better of a price. And I'd be looking for a move above 129. So it does look pretty decent to me for right now, but I don't want to buy it here. I'd rather wait for some sort of dip to try to get in on that. The risk reward isn't particularly great. Anyone else? You should now be able to see my charts. So if you can't see my chart, please let me know. Okay. I'm not sure why that is, why you can't see them. They should be visible. Other questions, things to check in on? All right, great. As always, if you have questions, that's me. That's the official one. As always, I'm happy to talk to you over Twitter and take whatever questions you may have, so feel free to do that. Thank you very much for joining me. I will post the recording as soon as it's done, so if you couldn't see the charts, try to check out the recording. That should work for you. It'll just be on YouTube. Thanks for joining me, and I look forward to speaking with you guys soon. Have a great week. Good luck.